We have a price target increase. Also, we have this bullish data. Last quarter, multiple ships did not make it on time to unload all of the vehicles to be delivered. Looking at the map here, this ship has pretty much arrived already. Looks like it's in the port already. And these two in Australia are also definitely fine. The only ship that won't make it in time is this one. This ship is headed for Thailand, and the estimated time of arrival is April 1st. Overall, certainly bullish compared to the last quarter. The Citi analyst Itae raised the firm's price target on Tesla stock to $192 from $146 and keeps a neutral rating. This is a little bit late, but we welcome that. The analyst says the company's Q1 auto gross margins will give investors a first look at the impact of Tesla's Q1 price cuts. Yeah, this earnings call is going to be quite important because we will actually have an idea what is going on with the margins. Morgan Stanley believes that Tesla will stay above that 20% gross margin number that Tesla promised, and that is going to be important to watch. Citi does not have conviction around a beat, so it currently sees a neutral Q1 setup for the shares. That said, recent data points have looked more encouraging, including China registration and a mindshare analysis. I'm not sure exactly what he means by mindshare analysis, but perhaps he is referring to the UBS survey that found that overall, less people are thinking about buying an EV this year compared to the last year, but that is not true about Teslas. More people are thinking about buying a Tesla than before. And it continues right here. The firm believes Tesla's competitive lead could widen further in a hard landing economic scenario, at least to some extent. So this is what I have been saying for a long time now. If we have a bad recession, while it may be bad for the stock price, it is actually going to be good for Tesla in the long run. Although then these positive words come from Itae, I have to question myself. Is that really correct? Because his track record, yeah. According to TipRanks, if you duplicated his trades from 2009, on average, you would have lost 26% per year. Wow. Well, that's compared to S&P 500, so the losses would be actually quite a bit less than that. Now, let's move on to someone that's a little bit better. Barclays expects that Tesla will deliver 425,000 EVs this quarter, which compares to 405,000 delivered for the same period last year, and this would be 5,000 above the consensus of 420,000. I think currently, under 420,000 would be a disappointment. I think markets would not be happy with that, unless they are not following Tesla closely, then maybe they would be happy with less than 420,000, but Barclays continues right here. Assuming production only modestly outpaces deliveries, a reasonable assumption, as there was already a large inventory build in Q4. I like how they specifically say that's a reasonable assumption, although a lot of things that sometimes these analysts say are not reasonable. You know what? It would be interesting if Gordon Johnson started saying that. Maybe then he would think twice before saying ridiculous things. So they say that's the reason for the potential upside results versus the consensus. But then they sort of give themselves away that they are not really that familiar with Tesla. Right here, they say, while we appreciate that Tesla inventory is likely low relative to other automakers, yeah, that's true, of course, the increase in inventory has been unusual for Tesla, which has historically operated tight on inventory given its use of a build-to-order mode. Tesla actually stopped building to order in 2018. What Tesla does now is they just build a whole bunch of vehicles, and then they hope that people will want these specific vehicles. But of course, Tesla has the order data, and they can adjust which vehicles they produce mostly and which ones they don't focus on as much. So it works out well for Tesla. Barclays also expects that Tesla will continue cutting prices to increase demand as Tesla can better afford price cuts relative to its rivals. That's a rather obvious thing. Barclays also has a position that the tax credits in the US temporarily boosted the demand In other words, pulled forward the demand where people purchase vehicles earlier than they otherwise would have. And that's because if you go to Tesla's website, you will see this message that you may not be eligible for the tax credit in the US if you order after March 31st. That message seems to be displayed for all vehicles, but really I only expect the Model 3 standard range to lose the credit. When I say all vehicles, I mean all versions of the Model 3 and the Model Y. James is certainly bullish about this quarter. He thinks that the upside risk, that's the one to look out for, meaning that Tesla may surprise on the upside. And just in Little Norway, Tesla delivered 638 cars today. So far, Roland has us covered with charts. Today, the sales in Norway officially exceeded the sales of the last quarter, although just by a little bit. But that was in the beginning of the day. This is the latest data. And as you can see now, very clearly, we are quite a bit ahead, or maybe not quite a bit, but visibly, clearly ahead of the last quarter. And if that data, once it is revealed by the big European countries, ends up looking like the data from Norway, then we will have a record quarter in Europe and perhaps we will blow out the consensus estimates. Maybe. We'll see. And in the 4 European markets with daily delivery figures, Tesla has delivered twice as many vehicles as the second closest to Tesla. So that's pretty good. According to new data from RERA, the Tesla Cybertruck is the most anticipated EV of 2023. There's no close second. Here you are at almost 2 million, everyone else. Yeah, you can probably add all of these other ones together and it would still be less than the Cybertruck. And I do agree with Sawyer here generally. Many underestimate the broad appeal of Cybertruck, especially Morgan Stanley. They expect so few deliveries of Cybertruck. They think it's going to be just a niche vehicle. Southern California is the largest pickup truck market in the US. A large percentage of those buyers are lifestyle buyers. They don't buy trucks for utility. They buy what's cool. And Cybertruck is the ultimate cool vehicle. But I think you will also have a lot of buyers that will buy the Cybertruck because they want it as a work truck because it's indestructible. And there's still some pushback against this. It is a niche vehicle because there's no significant market for pickup trucks outside the US. So sales are extremely limited even in case of a success in the US, and definitely not worth the 4+ years they wasted on the development instead of something useful. But the pickup truck market in the US is in the millions. And guess what? In 2021, the top 3 best-selling vehicles were pickup trucks in the US. We will also soon learn about the number of deliveries within China for the last week. If we just get a flat number, that will actually be pretty good. Looking at the past data, we are in this color right here. Usually the trend continues up until this week right here. So it is reasonable to expect a higher number or a flat number, although there are multiple quarters where it sort of stays flattish, but we'll see what actually happens tomorrow. James would be happy with just 15,000 tonight. And this is really bullish. You know how we talk about, well, hopefully in big European countries, we will see the same data as we are seeing in Norway, for example, and all of these other smaller countries. Well, in the UK, seemingly all of the inventory is gone. This person says, I was after a Model Y performance, but have been told I need to order one. There are only 4 used left that have 2,000 to 3,000 miles. And I remember Troy saying specifically that for the UK, the sales looked low at one point. Although we do see that there is still clearly some inventory left in the European Union. However, looking at the actual inventory in the UK, because, you know, when I see a tweet, I always want to double check for myself if that is true throughout the whole country. And here's what I'm seeing. I do see quite a few vehicles available. However, I do see a lot of them say coming soon, and there are actually quite a few here, but a lot of them say coming soon. If I just search here quickly. 60 of them say coming soon versus 40 of them being ready for delivery right now. So take that finding with a grain of salt, but still sounds bullish. And this is, of course, welcome. New data from Cox Automotive shows that Tesla gained more market share in the US in Q1 than any other brand. Tesla gained double what second place Nissan did. Toyota lost 2% market share in Q1. Although I'm curious, how exactly did they get these numbers for Tesla? They haven't reported the numbers yet. Dave Lee just double checked. If you do send an email to Twitter's communications department, do you really get a poop emoji in response? And yeah, that is the case. And Elon says, this is pure joy. If you want to get pooped on, then maybe email press@twitter.com. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.